What's going on, guys? It's SquireTrades here, back on June 12th at 4:50 p.m. This is the third episode of what it's like being a full-time trader and discussing the trades I take and what I look for day in and day out with the market. So coming into today, you will remember from yesterday, if you watched, we had 8:30 news yesterday. We had CPI, and then we had PPI today. Nothing on Monday and Tuesday. And I believe there is news tomorrow, although I would have to pull it up and look. Let me just do that really quick. 1 second. Tomorrow there is 10 a.m. news. Looks like it's the University of Michigan's consumer sentiment and also inflation expectations from University of Michigan as well. That's at 10 a.m. So I would imagine I'll be in a position before then potentially, but we'll see. I'm not entirely sure. So we'll start our analysis today here on the weekly chart. Once again, this is where I always start. Here we are. So I'm thinking we've had 1 week, 2 week, 3 week, 4 week. This is our fifth week inside of this 1 week imbalance. We also have this fair value gap we've displaced to. It's an inverse fair value gap with a bullish fair value gap overlapping. This is a pretty good area of interest here. I don't believe it would line up with the discount of this range. No, it doesn't, but I'm starting to think, pending how this week closes, if we close back inside this range, if this week fails, if we go put in a new low tomorrow, there's real potential that we could roll over just entirely. You can see this week's kind of done nothing. Our weekly open here was at, we'll call it 21,800. That's what I have here, our weekly opening price. And we've moved 113 points this week. I mean, the market's already closed. Today's Thursday. We had CPI Wednesday. We had PPI today. And we are 100 points north of where our weekly range opened. On top of that, we have this daily fair value gap as well, bearish fair value gap as well, that is pushing price and currently holding price down. Now, I would imagine, and you can see here that the equilibrium, the midpoint of this fair value gap held almost to the tick. I'm willing to bet if we close tomorrow bearish and we put in a new low, which doesn't seem likely. Tomorrow is another day that looks like it's going to chop, but I guess we'll find out. I have two scenarios currently in my head. On one hand, I'm looking for us to continue displacing long. I covered this trend line liquidity, also known as low resistance liquidity, and when we run it, it'll be a low resistance liquidity run, right? So we have two different targets we can look at if we were looking to position ourselves long like we did earlier today. We'll cover that in just 1 second. So these would be my two targets that I'm looking at long, assuming we close above this fair value gap. Because at this point, when this week closes and we've confirmed an inverse fair value gap in this sibi here, I'm automatically thinking we have to go and take out these lows or highs. We're going to at least take out the first one. I'd imagine we take both of them out and we begin some kind of pattern down. That's what I'm looking for. We'll see. In the case that we do have a very bearish Friday tomorrow, and we do respect this sibi, this bearish fair value gap here, I would imagine we might be due for some bearish price action. And it could be just a retrace down into this inverse fair value gap and bullish fair value gap overlapping, or we could entirely flip script. We could inverse this bullish fair value gap, disrespect this inverse fair value gap. There's no real PD raise supporting price inside of here, one small bullish fair value gap. But I would imagine at that point, we could potentially be looking at a quarter three and quarter four, just a bearish quarter three and a bearish quarter four. So really briefly, I'll jump over to the charts and I'll show you my execution from this morning. So what we had overnight, Asia, boom, we came down, swept Asia range. If you look at this from a 4-hour perspective, I would say we had one swing low, two swing lows, three swing lows, and I would call this low resistance liquidity. And we ran it all out this morning. You can see here at this wick, 2 a.m. overnight London, we ran it all out. So at that point, this becomes an area in which I'm expecting to see us respect coming into the AM session. We come down, we put in this low, we retest it, failed to touch it or even get through it. So I'm immediately starting to think, although we have put in these lows and we will come back and take these relative equal lows at some point, I was immediately starting to think that we were going to get delivered some bearish price action this morning. You jump down into your 15-minute chart, you can see here, we begin to displace, kind of fail, sell off, hold this level once again, displaced. You've got your market structure shift right here. You've also got your breaker, boom. You've got inverse fair value gaps. You've got your massive bullish fair value gap, boom. And then kind of chopped around for a few minutes here. This was New York Open. New York Open manipulated price into this bullish fair value gap and then sent it on up into, well, this fair value gap, plus one standard deviation of our Asia range, etc., etc. You'll see here on the 5-minute as well, you had this fair value gap support price. So at this point, we were kind of confirmed bullish on the day. So I ended up taking an execution somewhere in here with my original stop somewhere down in there. Looking to target yesterday's previous day high all the way up here, and then look for a continuation to extend to this liquidity, right? So what ended up happening was price started to go in my favor after being in drawdown for a moment. So I doubled down on my position, and then I adjusted my stops when I doubled down on my position to be at this low. And I ended up cutting somewhere in this area here. Actually, I think if we just do one of these and show executions, you can see I was originally in a position. I had to sell it. It didn't copy correctly. I ended up getting in 2 decent buy orders down here, and then ended up selling both of them up here at 916.50. 916.50. Yeah, so we came away with a little bit of profit, but it was nothing to write home about. 859.25 and 887. So in between that, we're gonna say somewhere in here, right, was our average. Somewhere in here. So we ended up getting out with $170, $180 worth of profit. I had 2 micro contracts on. Nothing to be super excited about, but to be honest, we've had a rough May. We've had a rough start to June. Price action has been very poor. And I'm hopeful that by August we'll turn around. The market's just kind of in a weird spot. I'll continue to be patient. I'll continue to keep risk at a minimum. I'll continue to say size down. I'm typically only trading with 1 micro right now, whereas most times you would probably see me trade at least 2 or 3, kind of depending on the setup and how wide my stop loss is. But yeah, we'll continue to remain patient. We'll continue to look for our setup. We'll continue to take our setup. And today was a great day. It's been a great week. Tomorrow's Friday. I live in Indianapolis. I'm going to the game 4 of the NBA Finals. Very excited about that. It's been a great week. Been a great day. I hope you guys can relate. That's pretty much all I have for today. This is SquireTrades. It's been episode 3 of the executions of a full-time trader. And we will see you guys tomorrow. Thank you so much. Till next time.